Hey fam, welcome back. So we're going to be going over the markets and the portfolios today. So with that being said, let's get it. All right. So you guys are probably wondering why the hell the market sold off so badly when Nvidia had such great earnings, and pre-market we were basically moonshotting on pretty much everything. As far as I can tell, the reason being is because there was some kind of strife, battle of wills going on, so to speak, between the Trump administration and some kind of trade court over the tariffs. So yeah, that's kind of what you're seeing play out here. So the markets obviously don't like that too much. That is the most likely thing that I can find that's probably the issue right now. Not really too concerned about it. Again, I just see it as temporary, just like everything else we see relating to these tariffs. It's not really going to be an issue, in my opinion. Besides, the markets are kind of a little extended at this point, so some kind of pullback or a sideways consolidation, I think, is probably likely. Of course, a breakout could always happen, so keep in mind we still have PCE in the morning. So let's go ahead and go over the transactions here. So we did buy more ACP this morning. Again, 3.43 shares at 583. We're probably just going to keep slowly nibbling at this position. We're probably not going to just start buying stupid amounts right out of the gate, because again, we are at that first benchmark, and the goal is to get all 12 positions as close to each benchmark as humanly possible before stepping it up to the next one. So just taking a look at ACP here, you guys can see it's up a little bit, but again, it's kind of negligent, honestly, the amount that it's up. I mean, it's very, very small. It's almost not even worth mentioning. So roughly about 315 shares here at the new distribution rate, which again, if we see another cut, we're probably going to scrap this one and get a different position. So we're about 80% of the way there on the first benchmark, and that's what's going on with this one. So we did close out a couple of positions today and open up some new ones. So I'm going to show you guys that right now. Okay, so going over to SOXL, you can see one of the positions we bought. We actually weren't even going to buy the second one back today. We were going to wait till tomorrow, but again, it's still relatively cheap. So buy back for pennies on the dollar on each. That is, let's see, the 14 and the 1450 strike. So if we go back in time a little bit here, you can see the 14 and the 1450 strike. So it would have been about $75 in premium. So we had to pay about $8 to get out of it. So walked away with, I think it's like $67 or something like that. So not too bad. And then going back here, we did open up another couple SOXL cash secured puts. One of these I wasn't able to mention to you guys on X because I actually wasn't around at market close. So you guys will just have to see it here. But anyways, so we got a 16 put and a 1550 put going on right now. This 1550 put, unless it looks likely that we are actually going to get assigned, we might just close it early tomorrow before the close of the session and reopen a new cash secured put for next Friday, because again, the whole theta decay over the weekend, right, kind of eating away at the value of the contract, which as a seller, that is what you want. As a buyer, that's like your worst enemy. So we don't really buy puts and calls too much, but if we were going to, we would surely let you know and why. So you can see the $53 in premium here on the 1551. And again, the delta for these is pretty well below 30, so the likelihood of getting assigned is pretty low. But this is a 3x leverage fund, so I personally, if you guys are even looking at this, I wouldn't honestly take the delta too seriously. But rules are rules, and we follow the rules. We try to keep the delta around a 30. So I'm just saying that if this thing does get extremely volatile out of nowhere, this delta may not mean much of anything at all. So 54 in premiums here on this one, and I just want to go back over this one more time. So let's see, the 16 for 54, and then the 1550 for 53. So it's $107 in premiums on the day for those. QUBT, that's still on. The expiration is tomorrow, but again, it's looking maybe like we're not going to get assigned at this point. We'll just have to wait and see. This is a quantum chip stocks. So these things are extremely volatile. They could move up and down, even at these prices, like 20, 30, 40% in a single day. Okay, so out of that, out of the premiums, we basically just pop these into GPIX because, again, the last three positions that we have to get up to $30 a month is GPIX, SCHD, and BSTZ, which we have not started on BSTZ yet, but we will at some point. So 13.38 shares here, 47.74, and then you can see the amounts that we bought here. So 2.19 and 2.28 shares at right around $48. And TSLL is looking pretty good. There was a kind of a sharp pullback on this, and also SOXL as well, because as you guys know, NVIDIA is the largest position in SOXL because of the positioning that they have in that ETF. But I mean, if you guys are looking to sell puts, this may be the opportunity if it keeps pulling back. Again, enter at your own risk. This is a 2x leverage fund on Tesla, and Tesla is already very, very volatile as it is. So just understand what you're getting yourself into if you want to be involved in that particular ETF. So these leveraged ETFs can make you a lot of money, but they're very volatile. So if you do not position yourself correctly as a long, you could potentially get burned. So that's the reason why we waited as long as we did to start getting more and more and more shares of TSLL. So anyways, the NASDAQ on the hourly is below the EMAs. We're looking pretty oversold here, so it could get a bounce tomorrow, especially if the PCE comes in lower than expectations. For hourly, back below the EMAs. Again, this is another reason why we were buying more heavily in GPIX today. So we're kind of wedged in between these two zones. So 21,300 to 21,600. We did go up to almost 22,000, like I told you guys, likely we were going to based on NVIDIA, but yeah, it turns out that was relatively short-lived. So, okay, yeah, this candle is not extremely bullish. I don't like it, but I like it a little bit more than what I was seeing earlier because this was actually a hammer candle at one point. So the candle body was all the way down here. It looked like it was going to close as a hammer candle with a rejection off that resistance would not be good. Still doesn't look entirely bullish, but again, we have not seen a breakdown of structure yet. So as far as I'm concerned, it's okay. The MACD on the daily is starting to converge lower. We're getting that death cross, so we'll have to wait and see if there is some kind of pullback coming. And the weekly, I mean, it's just an inside bar, so we don't have an actual move yet. Again, we have one more trading day to confirm exactly what this is going to do. But the weekly is, you guys can see based on the MACD and the RSI that there's still a lot of potential upside here. And Bitcoin, it's kind of bobbing around those highs. Like I told you guys, scenario number 2, 105 to 110,000. If it kind of bobs around in that area and doesn't break out and go straight to 130K, there is a strong possibility we could see a big alt season. But crypto is kind of a fickle, tricky beast this cycle. So we'll have to wait and see if that does happen, or maybe there's some kind of third outcome that happens here where it just bobs around the all-time highs and the altcoins bleed. I mean, that could always still happen too. It's hard to say at this point. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.